The S&P 500 and the NASDAQ closed at all-time highs, and for that, you can thank a blowout jobs report that both exceeded expectations and eased fears of a labor market and economic slowdown. The Dow Jones Industrial Average soared 191 points to 18,543. Not a record, but the records were with NASDAQ up 54 and the S&P 500, which gained 18. Here are the numbers that sparked the rally. Employers added 255,000 jobs, much better than the 179,000 economists expected. The jobless rate held steady at 4.9% as more Americans looked for work, and wages also picked up. We have two reports tonight. Hampton Pearson on the best two-month stretch of hiring this year. But we begin with Bob Pisani on the record-setting day for stocks.
It's been a broad rally, not just the S&P 500, but even the S&P mid-cap and the S&P small-cap indices are right at historic highs as well. Why is this happening? Well, the jobs report is the immediate catalyst, but remember, we didn't have far to go in the first place. The S&P 500 was never more than about 1% from an historic high in the past month. So in addition to the rally in the major indices, the market's showing signs of classic rotation. In the last several weeks, technology and biotech have been big market leaders. So earnings of big technology names like Microsoft have been particularly strong, beating estimates by a much wider margin than analysts had expected. At the same time, prior market leaders like utilities and telecom and consumer staples, they've been lagging. Okay, why the move up? Today's jobs report is the immediate catalyst, as I mentioned, but the rally didn't start this morning. First, overall earnings have been okay, and there are fewer downward revisions in the second half of the year than many feared. Second, crude oil, which gave everyone a scare a week ago, is showing stability around $41. And third, there's a lot more talk of fiscal stimulus, not just monetary stimulus, in the UK, Europe, and the US. Finally, the Brexit worries have been contained so far. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
For a second straight month, American employers delivered blockbuster job growth. 255,000 new workers added to payrolls in July, with June revised upward to 292,000.
About the best news we could expect. It suggests the economy is not stalling, it's coming back.
More part-time workers found full-time jobs in July, good-paying jobs. Professional and business services led overall growth, adding 70,000 new hires, followed closely by the leisure and hospitality industry, up 45,000, and healthcare, with 43,000 new hires.
If you look at all the numbers and take them at face value, this is a very good jobs report, no doubt about it.
The only negative sector, mining, losing another 6,000 jobs in July, employment falling by 220,000 since the industry peaked nearly 2 years ago. With job growth for the last 3 months now averaging 190,000 per month, leading Wall Street economists see the rate hike clouds clearing for the Federal Reserve.
This should be enough. If nothing goes wrong, this should be enough to tilt the Fed towards actually raising rates in September and then again in December.
For 1 month at least, the strong jobs report offsets concerns about overall weak economic growth and the Brexit fallout on the American economy. For Nightly Business Report, I'm Hampton Pearson in Washington.